fear grips the markets, when currencies tumble, and traders are desperate for safety, one asset always shines through the chaos: gold. But here's the thing. Today, you don't need a vault full of gold bars to profit from it. You can trade gold just like a currency directly on the Forex market. And that's exactly what thousands of smart traders are doing right now. In this video, we'll break down how gold trading works in Forex, why it's become every trader's favorite instrument, and which brokers offer the lowest spreads and most favorable swap rates based on real data we've tracked, not just marketing claims. But before we dive in, just a quick note. This video is for educational purposes only. Trading Forex is risky, and leverage amplifies those risks. Make sure you understand all the risks before trading, and seek advice from an independent financial or tax advisor if you need it. Gold, or XAUUSD, isn't just another trading pair. It's the heartbeat of market sentiment. When inflation spikes or stocks crash, traders run to gold. It's what we call a safe haven. But it's also one of the most volatile assets in Forex. In our own study at Offbeat Forex, we've measured the gold daily range. The result shows that it moves an average of 349 pips per day, sometimes swinging over 400 pips. That's massive. And that volatility is exactly why traders love it. Because when gold moves, it moves big. If you can handle gold's wild swings, you can master almost anything in Forex. Now let's talk about how you actually trade gold in Forex. In Forex brokers, instead of buying physical gold, you're speculating on its price. You can trade both directions and profit when gold rises or when it falls. You can use leverage, sometimes up to 1000x, depending on the broker. And you don't need huge capital. For example, if gold is trading at $4,000 per ounce and your broker offers 1 to 500 leverage, you could open 0.01 lot trade with just around $8. In other words, that's only 1/500th of the gold's value, or about 0.2%. That's awesome, right? Well, kind of. Leverage lets you trade gold with only a small portion of its full value, but remember, it's a double-edged sword. It can magnify profits and losses. In this example, if gold moves just 0.2% against your position, you would lose your entire $8. And that's not a big deal with a small test trade. But imagine you use the same full margin approach with $10,000. A 0.2% move, which is totally normal for gold on any given day, could either double your money or wipe it out completely. That's why you should always use leverage wisely, manage your risk, and never go all in on a single trade. Gold doesn't move slowly and it erupts. That's why it's a favorite for scalpers, day traders, and swing traders alike. For scalpers, gold can hit 10 pip targets in seconds. For swing traders, its strong trends can last for days, so they can surf the trend and make big profits. But that volatility means you've got to use wider stop losses as well to give your trades more breathing room. In our average daily range article, you can find the historical gold daily move and see why traders call it the king of volatility. So if you want to understand gold's behavior better, definitely check that out. Link in the description. When it comes to gold's price swings, there's a secret advanced traders use: correlation. It's a powerful concept that shows how gold moves in relation to other assets like major currency pairs or stock indices. Gold tends to move with GBP/JPY. They share the strongest positive correlation because both react to global risk sentiment. But gold moves opposite to the US dollar. When the dollar rises, gold usually falls, and vice versa. Understanding these relationships can help you confirm trade setups, manage risk, and avoid correlated exposure. In short, when gold and GBP/JPY are both pointing the same way, your setup just got stronger. Another crucial element in gold trading, particularly in CFD trading, is selecting the right broker. At Offbeat Forex, we built a custom monitoring infrastructure that tracks live spreads and swap rates directly from brokers' real accounts. 24 hours a day, 5 days a week. No demos, no marketing bias, just raw, verified data. And based on this live data, we found the brokers that consistently offer the best trading conditions for gold. When it comes to spreads, Two names lead the pack, StarTrader and Moneta Markets. Both delivered the lowest average spreads on gold. They're also well regulated with multiple licenses, including FCA, one of the world's most trusted financial regulators. So if you're a scalper or day trader, these brokers can make a noticeable difference in your profitability. If you want to compare spreads on other pairs or timeframes, you can check out our full low spread article on offbeatforex.com. It's updated continuously with live numbers, so you're never trading blind. Now, for the swing and position traders who keep their trades open for days or even weeks, swap rates matter more than spread. These are the overnight fees or credits you pay or earn for holding positions open. Our live monitoring shows the brokers with the most favorable swap rates for gold. A Markets ranked 1, Alperi close behind, Moneta Markets and StarTrader both on the third place with the same swap score. Because swaps fluctuate daily, we track them in real time. So you can always check the latest figures on our swap rate monitoring page. Link in the description. Trade smart, manage your risk, and may your trades shine as bright as gold.